Well, planting delays and trade tensions have many thinking about finances. After the USDA announced another round of market facilitation payments, some producers look to pledge their payment to lenders as collateral for loans. Joining us now for today's Rural Money segment is Roger McEowen with the Washburn University School of Law. Roger, as always, thanks for taking the time to chat with us today. Now, if a farmer should make that pledge as far as using that payment for collateral, will the lender get any kind of interest in these MFP payments?
Well, good to be with you, Janet. That's a good question, not only for the magnitude of what these payments are going to be, but I think it's a great question in general for lenders to be aware of. The security interest that's created by a security agreement is a pretty durable lien. And, of course, that collateral can change form as the production process unfolds. For example, fertilizer and seed become growing crops, animals are fattened and sold, equipment is replaced. The point here is that that lien follows the changing collateral, and in the end, it might attach to the proceeds from the sale of the products.
Explain what the proceeds of the crops are.
Well, in ag, proceeds of crops can take several forms. Those can include federal farm program deficiency payments or storage payments, diversion payments, disaster relief payments, insurance payments for destroyed crops, CRP program payments, dairy herd termination program payments, the list goes on. That's a big deal. So the issue here is whether those MFP payments are going to be deemed to be proceeds.
What does it take for the government program payments to qualify as proceeds?
Well, generally, the courts have said that there are three requirements that have to be satisfied. The crop must have been planted, and keep in mind, the USDA said last week to get your MFP this year, you must plant crops. That's a key point here. Secondly, the crop must have been lost or destroyed. Well, I lost my crop or I lost the production because of what the Chinese have done. And then third, the government payment being claimed must have been received by the producer for that lost or destroyed crop. I think you meet all three of those requirements here for MFP payments to be deemed to be proceeds.
So where do the MFP payments fit in? And is it different for this new round than what it was for the previous round?
That's a great question because 2019, the payments for 2019 are structured a little bit differently than they were for 2018. But I think clearly for 2019 and probably for 2018, I think I can make a pretty good argument that the MFP payments are more like disaster relief payments. And disaster relief payments have been held in the past by courts to be proceeds of crops. So if the lender has a perfected security interest in the crops and the proceeds thereof of the farmer, then that perfected security interest would include those MFP payments.
So, Roger, all things considered, what would you say is the big takeaway here?
Well, I think the big takeaway is to the lenders here. You've got to pay close attention to the status of your borrower's MFP application, require that any payments be direct deposited into the debtor's account with the lender if there is an account. But be careful on drafting documents and make sure that that security agreement reasonably identifies the collateral and sufficiently identify it in the financing statement. Make a general reference to government program payments as proceeds and then a specific reference to MFPs, and I think you're going to be covered.
Okay, Roger, as always, thank you very much for your insight today. Roger McEowen, he's with the Washburn University School of Law, joining us on the phone from Topeka, Kansas.